Hello, this is Greg Maxwell with Amicus Settlement Planners. Today in our quick hitter video, we're going to talk briefly about structured settlement annuities, the pros and cons, why you may want to consider using a structured settlement annuity in a settlement for your client. We're going to talk a little bit about rated ages, which a lot of attorneys can take advantage of or don't fully understand, and talk about why that's important. And then we'll talk about constructive receipt, which is an interesting, unique aspect of structured settlement annuities that you need to understand. The advantages of a structured settlement annuity for your client is if you've got a breadwinner of a family, for example, that is catastrophically injured or injured to the point where they need some kind of income replacement, an annuity is a perfect solution for that. It can replace income, it can be paid over the course of several years, it can be paid over the course of that person's lifetime. It's very flexible in how you set it up, but they're really good at replacing income that is lost and can't be earned anymore by the breadwinner of the family that may have been injured. Another nice thing about these types of annuities is that the rate of return is guaranteed. For clients, many of them are very risk averse, or many of them just simply can't take the risk. They have no capacity to take any risk, and so these are guaranteed by the annuity companies that issue them. And we're talking about the highest rated annuity companies in the world that offer these: New York Life, Pacific Life, MetLife, Prudential, Berkshire Hathaway. So the rates of return are guaranteed. They're generally not super high, but they are guaranteed. It also helps ensure that the settlement recovery isn't dissipated prematurely. You can spread it out over the course of many years. If you've got a brain injured client or a client that's just not used to handling large amounts of money, this is a very important aspect of structured settlement annuities. And it's really the reason that Congress gave these types of annuities the favorable tax treatment that they have. If you don't know, these types of annuities, obviously the initial premium that goes in is tax-free, but also all the growth is tax-free as well. A disadvantage is, like any annuity, once it's established, it's pretty inflexible. They're very hard to change once they're established. The returns, as I mentioned, are fairly modest because the rates of return are guaranteed. Depending on the time horizon that the annuity has, you're looking at between 2 and 5% rate of return per year is generally pretty average. Another disadvantage that we can help you minimize, but a disadvantage we need to mention, is that these clients can go and factor these annuities. If they see an ad on TV late at night for J.G. Wentworth or some other company, they can call and these companies will pay them some amount of cash now for their future stream of payments. And so even though those do need to be approved by a court, judges unfortunately tend to just rubber stamp those. So if you're thinking about doing an annuity, we do have ways that we can help reduce that factoring risk, but that is a disadvantage you need to be aware of. I want to talk briefly about rated ages. A rated age is a mechanism whereby we can increase the rate of return per settlement dollar on a lifetime payout. So if you've got a client that needs lifetime income, we can submit some medical data about your client to the annuity companies, and they will then base that lifetime income payment on their rated age rather than their biological age. So if you've got a 40-year-old who's been seriously injured and happens to be overweight and smokes and has diabetes, then that annuity company is going to rate him as if he were, say, 55 years old instead of 40 years old. And that means that that lifetime payment is going to be larger per settlement dollar. So it's just a way to increase the rate of return on a lifetime annuity. The injuries that you submit to the annuity company don't need to be injury related. It can be just the fact that your client happens to be overweight or smokes or has diabetes or some other health condition that's going to shorten their life expectancy. And then another issue that we need to make sure you understand is constructive receipt. In order to gain the tax advantage that these annuities enjoy, the clients can't have constructive receipt of the settlement. So what that basically means is if your client wants to do one of these annuities, you can't receive the money from the defendant into your IOLTA account and then purchase the annuity. The annuity needs to be funded directly by the defendant and not pass through your IOLTA account. And so don't get caught with the money in your IOLTA account and a client that wants to do an annuity. So If you've got a client that you think might be a good fit for a structured settlement annuity for whatever reason, give us a call. We can help you think it through. We can talk to your client about, what a structured settlement annuity might look like for him or her and give them some advice.